All right, thank you very much for joining us. It's that time where we talk business on TVC News. And here are the top stories we are tracking for you at this time. IMF cautions Nigeria's monetary and fiscal authorities on policy sustainability as Bitcoin investment in Nigeria rises by about 5%, despite FTX losses for Asian shares recover, but concerns over China may resume strict COVID curbs as it lingers. On our interview segment on the show today, our conversations will stay with analyzing matters arising and, of course, discussions around the ongoing MPC meeting in Abuja, where we expect a resolution to be reeled out anytime from now by the Apex Bank governor. Anytime from now, we'll be getting that, and we'll be staying on that all through the show to consider the issue. The International Monetary Fund has faulted the Central Bank of Nigeria about its monetary policy, maintaining that the Apex Bank has been ineffective in its fight against rising inflation. This report tagged how fiscal restraint can help to fight inflation. The IMF wants the Central Bank of Nigeria to reduce its monetary policy rate in order to cushion the effects of inflationary pressure on households. The IMF also wants the federal government to tighten up its fiscal policy through investments in critical sectors capable of putting the economy on a better path in the long term. The IMF also notes that fiscal stimulus in the current high inflation environment will force central banks to slam on the brakes harder to curb inflation, despite elevated public and private sector debt. Nigeria's investment in Bitcoin increases more than 5% in 2022, despite the cryptocurrency market losing $562.93 billion of its market value in the same year. Despite the crypto market losing over 1 trillion naira in 2020 and FTX crypto exchanges going down, Nigeria's BTC investments surged more than 5%, with market cap of Bitcoin dropping from $875.94 billion as of December to $313.01 billion as of November 2020. According to the report, Nigeria is one of the largest countries based on trade volume for Bitcoin, as BTC trading in the nation reached about 171.5 billion naira, amounting to $400 million in the first 6 months of 2022. In other news now, the average price of 5 kilograms of cooking gas rose by 0.21% from 4,474 naira in September to 4,483 naira in October 2022. That's according to the latest report from the National Bureau of Statistics. The NBS, in its cooking gas price watch for the month of October, disclosed that on a year-on-year basis, the increase was 70.62% from 2,627 naira in October 2021 to 4,483 naira in October 2022. The NBS, in its cooking gas price watch for the month of October, also disclosed that this rose in October 2021 to 4,483 in October 2022. The report shows that Kwara State recorded the highest average price at 4,955 for 5 kilograms, followed by Niger, 4,950 naira, and Adamawa at 4,940 naira. Meanwhile, states like Abia, Kano, Delta recorded the lowest prices of 4,045 naira, 4,100 naira, and 4,139 naira, 29 kobo, respectively. As the Central Bank of Nigeria's Monetary Policy Committee almost wrapping up its final meeting for the year, deliberations on the next policy direction going into 2023 would be made. Now, some analysts held the view that the committee would have no choice to further hike its monetary rate to curtail the rising inflationary pressure on the economy. This is against the backdrop of global policy trend, which has seen American Central Bank, the Fed, and the Bank of England increasing monetary policy rates. It will interest you to know that in the last 3 meetings, the CBN has adopted a hawkish monetary approach to raising our benchmark rate. Of course, by a cumulative 400 basis points, from 11.5% to 15.5%, which represents the highest in over 20 years. With cash reserve requirements rising to a minimum of 32.5% in a bid to mop up liquidity. Meanwhile, despite the aggressive move by the CBN MPC, Nigeria's inflation rate has remained unabated, hitting a fresh high of 21.09% in October 2022, with no sign of moderation as the CBN is now faced with a daunting task of curbing the rising cost of goods and services, as well as reducing currency in circulation. I'm being joined first by the Managing Director and Chief Executive Officer of Dignity Finance and Investment Limited, Dr. Chijioke Ikechukwu. He's also a Vice President at the Abuja Chamber of Commerce and Industry. Thank you so much, Dr. Chijioke, for your time on the show. I'm also being joined by Mr. Mustafa Wahab, who is an investment analyst at Chapel Hill, Denham. Good afternoon, gentlemen. Thank you for your time.
Good afternoon, Tolu.
Hi, Tolu. Good afternoon.
Yes, Dr. Chijioke, I'm going to start with you. Now, we've seen 3 meetings by the MPC, and we've seen an increase in all of these meetings, taking us to about 400 basis points. And as of today, we stand at 15.5%, talking about our monetary policy rate of the Central Bank of Nigeria. But this is not reining in on inflation. What is your reaction to this move by the Apex Bank?
The increases we have seen and we have witnessed were occasioned by the global economic situation, which we found ourselves, where every country of the world started experiencing high rate of inflation. And in fact, many countries, especially developed ones, have never seen this kind of inflation in the last 20 years or more. And so we are also experiencing this height of inflation even for such a long time. And so these things have been occasioned by all the various factors that we all know today, the war happening in Ukraine, which has made the cost of everything to rise and that. And of course, in order to adjust to this kind of inflation, it was necessary for our own regulatory bodies, and of course the MPC, to adjust all the rates, especially the MPR and the CRR. And, so these were all the things that have affected this. And even before now, we expected that these increases would have been more than this, but CBN, in their own wisdom, tried to caution themselves to ensure that we don't increase so much of the MPR far and above that will also cause another ripple effect that will worsen the economy. So these are all the things that have caused it, and we are witnessing it today. Like I said, it's a global situation all over the world right now.
Well, let me ask Mr. Wahab the same question. Mr. Wahab, what do you think, or how does it come to you, considering the global and, of course, domestic issues that we face as a country, and inflation still standing at 21.09%? Some analysts like you believe that the CBN will have no choice than to increase rates again. What do you make of that?
All right, thank you very much, Tolu. So, you rightly mentioned over the last 3 meetings, they've raised rates. The last policy meeting, they actually did up to 150 basis points. And I think at this point, the CBN could argue that some of the policies that they put in place are actually working. And I'll give you an instance, right? If you check the inflation numbers on a month-on-month basis, what you see is that since July 2022, month-on-month inflation has actually been coming down gradually, right? The only reason why year-on-year inflation is at 21%, the fastest pace of price growth in about 17 years, is basically because of the negative impact of the low base from last year. Right. So somehow, one can argue clearly that, look, all the policies rates that they've taken, we've started to see the impact on the inflation data. So what that means is that between now and the next 3 to 4 months, once that negative impact of the low base from last year thins out, we'll probably start to see, some sort of significant moderation in inflation towards Q1 of 2023. Again, it's also imperative, like Doctor said, for the CBN to raise rates. given the fact that, US, UK, EU, they are all currently, going aggressive as far as, hawkish rendition is concerned. And so for the CBN to reduce external shocks or external pressure, stemming from, investment flow, getting out of the country towards where it's are a lot more attractive in the developed market, then what that then means is that CBN would have to also raise rates in the domestic market to sort of ensure that their investors are getting, return that is more or less, in tandem with the risk that they are taking. So, I mean, the argument is that we can view it from those two perspectives and say that, yes, some of the policies in implementation has actually been working.
Nice one there, Mr. Wahab. Dr. Ikechukwu, food inflation is biting hard. We see the figures, coupled with flooding that we've seen in some states of the Federation. This is indeed worrisome and would tell on some of the efforts of the Apex Bank. One is the Anchors Borrower Scheme, which a lot of money has been invested in. Now, as we move to we're supposed to be in the harvest season and all of this is happening, what effects would that have on price of food and continuously also on inflation?
Well, if we have to say the truth about the expectation and the expectation of the food space of Nigeria, we should expect that with all that you have mentioned, the flood, the insecurity in the farmlands, the logistics issues and shortages actually from supply chain coming from grains and all the grains coming from the warring countries, we are also expected to have an increase in the food inflation. Right now, it looks like it's still manageable, but of course, when we add the seasonal impact on the pricing right now, where there's going to be a lot of demand pool, then we expect that the price of food, the cost and price of food will just increase. Already, even without the season we have entered into, we would have had this food inflation rising above every other inflation. But to happen around the same time when the demand for all the items of food is happening. And then, of course, before this happened, we saw a lot of flood. We're already anticipating that rice may not even go up to half of the demand. The supply will not go up to half of the demand because of the kind of flood that happened before now. So having said all this, it will not be surprising if by the end of this month, we see a higher food inflation happening, and noting that the causes of all these other impacts on the food inflation have not been improved. We have not improved the supply distortions from Europe. We have not improved on insecurity that has happened in the last few years. We have not improved on, of course, the flooding. The impact of the flooding is already and destroyed the farmland. And so if we look at this, of course, we also know the impact of exchange rates on part of our food, because these are all inputs into what we consider today as our final products. So all these things are all that are contributing to the kind of food inflation we're experiencing today. And none of these things has improved. So because they have not improved, we don't expect that there's going to be an improvement in the inflation we expect in the food space. So that's the expectation, the fact that the prices of food will increase and the inflation will just also increase, at least at the end of November.
Great stuff there, Doc. As we prepare for the Christmas season, there's going to be a lot of buying this season, but I'll come back to that. Mr. Wahab, Doc mentioned something very important, talking about our FX crisis. We've seen what the central bank wants to do in recent times, redesign the Naira. And immediately that happened, we saw what happened in the parallel market, the greenback getting some bashing there from the Naira, a little bit of appreciation, which we saw at that time. But let me ask you, that level of appreciation, how sustainable is it? As at today, the dollar against the greenback in the other market is about 770 Naira, in some cases 780 Naira. What's your reaction to this?
Oh, look, Tolu, It's not sustainable. That's the short answer. Because I mean, at the end of the day, it's all about the case of demand and supply. So there are two key factors driving naira depreciation as we speak. And if the CBN does not introduce some sort of FX policy framework that will redesign the entire structure, then we probably would continue to see this sort of depreciation going on. Number one is that there's still a lot of backlog in FX demand that the CBN is yet to clear. The last time we checked this number, up to $6 billion as far as backlog is concerned. I mean, if you speak to any manufacturer, I always speak to cement producers. I was in the same, meeting room with Lafarge recently. Danksem, all of these guys, they are all usually struggling to get, FX in order to, complete, their production process, right? Beyond, cement, go to the aviation sector, think about the manufacturing sector. So what we're saying is that up to $6 billion is yet to be cleared as far as backlog is concerned from the CBN. Now, beyond the demand side of things, there's also the speculation side of things. As we speak right now, to look, a lot of people are losing confidence in the naira, right? Even people who don't need FX for anything, they just want to hold FX just so they're able to protect their assets, right? And this is probably going to continue. I mean, day in, day out, month in, month out, the CBN is not, coming out. I think one of the major objectives of the CBN is to give confidence to the market. So the CBN, I'm really sorry today, hasn't really done a lot of that, right? Until we see fundamental change or fundamental shift as far as FX supply is concerned, they will probably continue to see this devaluation or depreciation continue. Production challenges is still there. I think crude production based on OPEC data as of Q2 2022 is actually down by up to 5%, right? Crude oil price also is now starting to moderate significantly. So the impact of this is more or less driving some sort of significant reduction as far as FX inflows is concerned. And if the CBN is not able to supply the market, then there's no point thinking about the fact that whether or not the naira would appreciate. Would probably continue to see this sort of framework continue.
Now, let me take it to Doc. Doc, the FX thing which you raised, I'm worried about what manufacturers will face at this time. Particularly, it's a seasonal, it's a festive season where there should be more production, there should be more manufacturing, storehouses should be loaded, raw materials should come in. But there is this issue of difficulty in assessing Forex. What's your outlook for the sector?
Yeah, that is the most challenging aspect of the FX market right now. Note that a good number of Nigerians move their monies from naira to foreign currencies and put them in, deposited them in various domiciliary accounts. Now, these Nigerians, including me, we have been trying to have access to some of these funds that are already saved, purportedly saved in commercial banks. And we can't have access to our monies. And what we are told is the fact that they don't have dollar to give us. And if we must have this money, then we must ask for it, change it in naira at the rate of official rate.
Wow.
Nobody will buy foreign currency at 800 or above 800 naira to a dollar and go and get value for it about 400 and something. So this is an impossible thing. So that is where the main threat is. By the time all the people who want to access their funds approach the banks, they are going to see that there will be a run on all these banks on foreign currency. So I agree with Wahab that this is not going to improve because the rates we are seeing today is only a far cry from what we are going to see, especially if there is real situation and no other intervention coming from, no other back intervention coming from any other source. But let us also note that most of the times we blame CBN. Most of the factors that are responsible for the scarcity of foreign currency is exogenous to them. It's just beyond their control. Now we know what is going on with in the oil and gas sector. The fact that we have just been importing these petroleum products. I don't think it's the responsibility of CBN to handle. That is actually a different sector altogether completely. And that is affecting the kind of revenue we're getting in foreign currency. So we also know what is going on with the fact that our exports will still continue to have balance of trade deficit, and that is also not within the control of CBN. We also have a trade policy handled by a different ministry, and we have all these things happening. We have a problem with our revenue base, which is a part of our fiscal side of economy. So this is just the fact that because they turn out the policy statements, everybody calls their name. Otherwise, most of the things happening today are not within their control to handle. But be it as it may, there are a lot of things CBN can still do to be able to ensure that we have enough of this foreign currency. The question is, how are other countries that do not have oil, how are they managing? How are they coping with all that they're doing? You know, what have we done in the last 10 years to be able to ensure that we continue to have good revenue in foreign currency? The policy meetings we have ever had have not addressed those issues, making sure that export is our priority. When you see a government that has export as priority, you will know the policy statements are going to be mentioning export, drive export, but we are not in that category right now. So these are all the things we need to have an intentional policy. We need to have intentional policy that will drive all kinds of export. We need to have our advantage. We have advantage in so many agricultural produce, and we can say we need to grow this particular produce from this to that, from that to that, from this to that. You know, so we have an export processing zone. We have export council. You know, so these are all various people and parastatals that are managing various aspects that are supposed to be affecting whatever thing we have. So we hold all these ministries and parastatals responsible, including CBN, for the kind of situation we have found ourselves. I can tell you, if there is no intervention by CBN, we are going to be the worst. We're going to have the worst value, have the worst currency value in the world. You know, and so I do hope we don't get there, especially with the kind of situations we find ourselves. I think we need to get our policy right in order for us to avoid the kind of embarrassment that happen to us if the exchange rate crashes against us. That's exactly what we're going to have.
Yes, it's in. Dr. Chijoke, if you can hear me, and also Mr. Wahab, the central bank has increased the rate by 100 basis points. So it now stands at 16.5%. I'm just getting that in now. My colleague is live at the CBN headquarters in Abuja, and that is just in now. 16.5%. So it's official.
What about the CRR?
You want to say something, Doc?
Yes, what about the CRR? Did they touch the CRR?
Yeah, I think we're still going to have all of that coming in one after the other. But that's just breaking. We have that now, 16.5%. Was that what you expected? Let me still start with you, Doc.
We all expected it. Yes, I expected that it was going to happen. But I also expected that CRR will increase, considering the mop-up of cash that's coming up from everywhere into the banking system. So I expect that the CRR will be touched. But I'm sure by the time the announcement is made, clearer, we will know whether it was actually touched. You know, so this was expected, and this is actually in line with global expectations and global practice right now. The fact that virtually every country is just increasing their monetary policy rates, you know, so this was expected.
Okay, Mr. Wahab, now let me turn to you now. MPC increases rates by 100 basis points, so it stands at 16.5%. MPC holds a symmetric corridor at plus 100 minus 700 basis points. Holds cash reserve ratio at 32.5% and retains liquidity ratio at 30%. I'd like you to react to this.
I mean, doctor has said it clearly. It wasn't unexpected.
Honestly.
we actually, thought that it was going to happen. And I mean, there's a lot of justification for it. Yeah, I mean, we've said a lot of the justification in the studio today. Inflation rising at the highest level, the need to sort of reduce pressure from the external leg, and then also find a way to sort of continue to put policies in place that will suck all the liquidities in the market so that the speculative attacks that we're seeing on the Naira will actually reduce. So, I mean, it's not totally bad. It's not bad also in the sense that, I mean, GDP is at a comfortable level of around 3%. And I guess that's what gave the CBN some sort of comfort to, aggressively pursue price stability tactics rather than focusing on economic growth. So, I mean, it's a laudable one. And obviously, we'll start to see the impact within now and the next 3 to 4 months.
Let me follow up with you. Doc raised a very important point, improving exports so that we can get more FX. What's your assessment of efforts being made towards that? That word diversification, for me, I think I'm getting tired of it because we're saying it. Are we really acting it?
I mean, I won't totally criticize the government, but what I would say is that the action that we in the market would have loved to see, it's hard slow compared to what the government is doing. So I'll give you an instance. About 10 to 15 years ago, Nigerian government came in to say that, look, we have the capacity to produce cement in Nigeria rather than importing cement. You know what they did? What they did was to empower a lot of local cement producers. And today, what we have as far as installed capacity is concerned can supply the entire Nigerian market as far as cement consumption is concerned, and also export, the balance, right? So just imagine the size of pressure that we're facing in the FX market today, and then you now have to add another FX demand for cement importation in the country. That would be a lot of pain, right? They've solved that part. Secondly is that, I mean, about 5 years ago, they also, Alhaji Dangote came that he wants to, start a huge project. And since then, the government has been really, really supportive, right? And to put everything in proper context, right? At least, I think Doctor actually mentioned it earlier, at least 40% of what we import, our import bill today is from petroleum imports. Just imagine, the refinery coming on board in 2023 and Nigeria stop importing that 40%. That sort of leave a lot of room, for the CBN to have enough FX in their coffer, to defend the Naira to their best, to their best level. So they are doing a lot. We've seen a lot of policies as well, milk importation, rice importation, crude palm oil importation too. They are doing a lot. As far as we are concerned in Chapwe, what we're doing is just too, slow versus what we would like to see. But if they increase the pace of this import substitution and obviously export promotion, then long term is actually positive for the Naira, long term.
Long term. I like that. Long term. Doc, let's take it.
Yes.
Part of the issues raised this just concluded meeting is about emerging global liquidity crisis. Now, what does this really mean if that happens? Because everybody's talking about liquidity crisis at the moment. Is it likely to affect us also as a country?
To the extent we had enough buffer in our foreign reserve, enough buffer generally. To that extent, it will not affect us adversely. But if we take a lot from our reserves to support the Naira, to support the value of the Naira, there will be a time we'll get to, knowing again that the revenue we're getting from our oil, which obviously constitutes a whole lot of our revenue base, is not enough to cover for all that we need in that area. Don't also forget that we have servicing of our debt, which will have to be serviced, and this servicing is done in foreign currency, and many other things that are happening. And so if these things, if this continues this way, especially the crisis, the global crisis, if it continues, then we are likely to have that crisis, but not immediately. We may be having it in a very near future. So there has to be things that will actually give us some buffer, and that buffer must come from the fact that Of course, I keep talking about this oil, the fact that our installed capacity, we are not anywhere near it. If we were even producing near our installed capacity, for many years, we were producing up to 2.2 million barrels per day. And that has been almost a mirage right now in the last few years. So we didn't enjoy anything from the rise of petroleum price in the international market. These are the things that are hitting us right now, and that is actually going to play out probably in near future when we want to defend a little more. Of course, so what we'll say is we can't defend this naira anymore. What you want to do, go ahead and do it. And then, of course, they want to hold a little as reserve to even fund some parts of imports. Of course, that a lot of imports cannot be funded today because there's no money. I know a few people who want to go to school can't even have access to these funds to pay their school fees. So the issues are so many, and they are frightening. But we need to actually prepare for it in the right perspective.
Really need to prepare in the right perspective. I like that. Now, let's move on to talking about what we should. Anyway, that's the last meeting for the year, and we don't expect anymore. But what's the implication of this moving forward? Doc, let me stay with you, Doctor. Do you see?
So from what we have seen, an increase in the MPR, what we are going to receive again is that all banks are going to start writing to their customers who have borrowed money from them to say, we are adjusting these rates. And of course, when that happens, the impact, the cost of borrowing will increase. When the cost of borrowing increases, the cost of producing 1 unit of item will increase. And when that happens, a few people may start losing their jobs because they can no longer cope with the cost. And because competition is still there to be able to check you and to be able to say, look, you cannot continue to increase your price because this product you're selling, you're not the only person in the market. So that's exactly what we're going to have. More and more people are going to be struggling to pay more, to produce more. To produce, they are going to pay more. So if this is the case, what is going to happen is that items that we're going to see in various counters may increase in prices. It may also reduce demand for this foreign currency, I can tell you, because when people cannot access this kind of funds, you see that the demand for foreign currency will just also reduce. So these are some of the impacts it's going to have. But whether it's even going to add to the already existing inflation, it's going to add because the eventual cost of doing business will pass over to the ultimate consumer, which obviously increases prices of goods and services. So these are some of the impacts we're going to have going forward from this increase that we have right now.
Interesting stuff, Dr. Ikechukwu. Mr. Wahab, I don't know if you have more to add, talking about what the implications will be, maybe in the short, medium, and long term.
Okay, so I think Doctor was a bit negative. I would be positive on the impact. Yeah, so to look at it from a little bit positive point of view,
okay,
right? What would happen is that securities in Nigeria, Naira bond securities would be a lot more attractive to foreign investors. And one of the key things that we discussed today is how Nigeria needs to grow exports. And most of the time, this export strategy typically takes a lot of time, between 5 to 10 years before you see the implication on the economy. But the short-term solution to currency issue is to attract hot money. Hot money would come via FPI.
Yeah.
And when your rates are a lot attractive, FPI would come into the market, and then, they could potentially increase the liquidity of the FX that we so need in the market. Beyond that, whilst, Doctor was looking at it from the producer's perspective, that, the cost of borrowing for them would increase. Another way to look at it is that we can potentially start to see Naira investors seeing a lot of opportunity in investing in Naira assets. So rather than use that money to speculate on the currency, you can just go and put it in a T-bills. T-bills, I mean, at the moment, I think is now starting to trade at around 14% level. 100 basis point increase in NPR just basically means that the rate will probably go up. So what it means is that from the positive side of things, there's opportunity for people to probably ignore, speculating on the Naira and, in fact, invest in Naira assets rather than looking for FX to buy. So I guess from that point of view, perhaps the CBN is right, but there's also a downside that, look, a lot of people who want to borrow money, especially from business point of view, like Doctor said, would be borrowing at an higher cost, which means that they probably want to pass the cost, to final consumer, which again can potentially, be inflationary. Yeah, but I guess the structure of Nigerian economy is so tough that no matter what you do, there's usually a negative and positive.
Yeah.
Honestly, I'm enjoying this conversation, despite the fact that it's via Zoom, clean feeds, at least we can hear you clearly and make sense of this conversation. Doc, as we wrap up, are you worried about a global recession, which might trickle down to Africa's most populous nation?
This is not the first time that we're experiencing this kind of situation, economic situation. Every single economy is working so hard to be able to come out of it, to be able to manage it. In this situation where it's just for us to avoid imported economic crisis, all we need to do is just to look inwards and look around us and determine what are those things we can do without having to import, without having to deal with international market, the international financial system. Are there things around us we can manage without having to depend solely on international market? So if we're able to do that, you see that the impact of the global crisis will be minimal on us. Like I said before, I wish we had enough buffer and enough reserve to be able to contain this. The last time it happened, we had a reasonable size of buffer to be able to contain it. That was what the impact did not hit us so badly. So we're expecting that while we are working, African nations are working. Of course, we have seen a lot of inflation hitting African countries. In the last 1 month or two, I have visited like 4 African countries, and I saw that the inflation rate has been so hot and hitting them so badly. And this is actually the impact of this global situation. But of course, if they sit down well, there has to be a plan that should be able to ameliorate this impact on Africa and on Nigeria also.
Interesting way. Now, Mr. Wahab, I also like to ask you the same question. Are you worried about any form of global recession as we move on in the year?
I even like the way Doctor answered the question because, we don't really care about global inflation. Global recession. What we care about is how does it impact Nigeria?
Impact us as a country.
If we exactly as a country, it doesn't matter whether or not there's a war in Russia. What matters is, are we exonerated economically, right? And one of the best ways we can do that is we have to find a way to diversify our export base. Rather than relying solely on crude oil, as a function of our foreign reserve, which is currently up to 70 to 80%, we can look for other means, right? Whilst a lot of African countries are facing significant inflationary pressure, a country like Zambia, they're actually maintaining a single-digit inflationary level. What did they do? How did they do it? These are some of the questions that we need to start to ask ourselves. And then from there, it doesn't matter what's happening globally. What matters is how are we managing all of those situations. So I think Doctor is really spot on.
I must thank you so much, both gentlemen, for your time. Let me read it again before I sign out. MPC increased the MCR by 100 basis points, and it stands at 16.5%. Asymmetric corridor, plus 100 minus 700 basis points. Cash reserve ratio, 32.5%. And liquidity ratio stays at 30%. I must thank you so much. 2 gentlemen have been speaking to the managing director, Chief Executive Officer at Dignity Finance and Investment Limited, Dr. Chijoke Ekechukwu, and also an investment analyst at Chapel Hill, Denham, Mr. Mustafa Wahab. Thank you so much. I really had a good time on the show today.
Take care, Wahab.
Thank you so much, Doctor.
All right, do enjoy the rest of your day. Thank you for staying tuned. It's time to look at figures from the exchange, and the market is still positive, up 0.61%. Effiong Cup is in the house. Gainers, Access, Cadbury, FCMB, Fitson, GT, Co. Losers, RT Briscoe, Champs, Suno Assurance, Cheap PLC, First Bank. Effiong, 3 banks playing in the gainer side for today. Access, FCMB, GT, Co. What's your reaction to this? Looks really...
Access Bank is actually coming back to replay what it did yesterday. It was able to contribute more than 1% to the growth of the market. Today, again, 8.4%. And something is telling you that the stock of the bank is appearing attractive, and investors are looking in that direction. We also see Cadbury repeating its coming to the market. As I said, manufacturing companies, this is the time that they stock up their warehouses, preparing to do last season, sales for the year. And Cadbury, a household name, producing for children, even wives. So we see the companies, manufacturing companies, trying to pick up, just to end the year in a positive way. If markets sustain this activity, remember yesterday I was saying we expect 3 days positive. Yeah. This is the second day.
Yeah. Let's get Paul's view. Paul is joining us via phone. He's an equities trader, Planet Capital. Mr. Paul, if you can hear me, what is your reaction to trading for today? It's looking good.
Yeah, the market gained 0.6%, that's 50 basis points, sustaining the gain of 0.47% we saw yesterday. Though at the tail end of the market, we saw news coming from the monetary authorities that interest rate was MPR, monetary policy rate was increased by 100 basis points. We expect that might moderate this. That news would likely moderate this upward surge we've seen in the market in recent days. There've been somewhat improvement in market confidence of investors. We're seeing more participation at this time of the year. Investors are already looking at dividend, the full year results for companies. They've looked at the 9-month results and are already projecting into what will likely take place by February, March next year when the full year results are released. So investors are already taking positions. We are seeing strong interest in the liquid segment of the market, notably stocks like equities like GTB that have been severely battered through the second half of this year. We're seeing GTB crossing 20 naira for the first time in the past, for almost like for about the past 4 or 5 months. We're seeing Zenith Bank going to over 22 naira, and this improvement is a fallout of investors who are already taking positions for next year. Although we think that this increase in rates by the monetary authorities, we have some reset in the market in the short term. In the near term, the thinking of investors on dividend would outshine that the negative effect coming from the rate hike.
All right, then I must thank you so much for your time, Mr. Lozum. Do enjoy the rest of your day.
Yeah, thank you.
Yeah, a parting shot from you.
I see the market struggling to close the year in a positive manner, and encouraging those sectors that were somehow negative or dormant to come up. And I also must express my happiness that the insurance sector throughout this year has been able to show itself, bring itself up in a very strongly, version. Because before now, we were not seeing insurance stocks, showing themselves up and down. But every trading day, you see that you have a number of insurance companies here and there, and that is to say that majority of investors are also considering the contributions of that particular sector, how it can help businesses to stay afloat, or even those that have problems to go back and be able to return to them. So this is the way it happens in many other economies, other than focusing so much, only on the banks. And so we expect that the fact that we are moving towards an election, and we will also see the market trying to do its own way to bring the economy to a stable point.
Thank you so much, Effiong Ekop, for your time as usual on the show.
Thank you, Tolu.
Qatar Energy has signed a 27-year deal to supply China's Sinopec with liquefied natural gas, making it the largest single sales and purchase agreement in the LNG sector. Qatar Energy Chief Executive Mr. Saad Kabi explains that the move is an important milestone for the first sales and purchase agreement for North Field's East project. He adds that since Russia's invasion of Ukraine in February, instability has driven buyers to seek long-term supplies and understand the importance of having long-term supply that is fixed with a reasonable price. Meanwhile, Europe is in need of a vast amount to replace Russian pipeline gas that would make up almost 40% of the continent's imports. Asian stock recouped early losses today, supported by improved sentiments for China shares. But concerns lingered that Beijing may reimpose strict COVID curbs that could cause supply chain disruptions. European stock features indicated a sluggish open, and Euro stock 50 features up 0.15%, German DAX features up 0.09%, FTSE features up 0.30%. The broad Asian Pacific Index ex-Japan recovered earlier losses to inch 0.07% higher in the afternoon, while China CSI 300 benchmark was up 0.43%. Hong Kong benchmark index losing 0.7%. Japan's benchmark Nikkei average rose 0.69% as the yuan's weakness against the dollar raised prospects for domestic manufacturers. Australian shares rose 0.59%, supported by strength in miners and banks. In the money market, the Russian ruble hovered around 61 rubles to the dollar after touching its lowest in nearly 2 weeks earlier today, with pressure from oil market jitters countered by rubles buying to cover month-end tax payments. The ruble, according to the report, is supported by a month-end tax period in which exporters usually convert foreign exchange revenue into rubles to pay domestic liabilities. The Russian currency was unchanged at 62.33 rubles against the euro and was down 0.1% against the yuan at 8.48 ruble. Meanwhile, analysts are of the view that an improved situation on the energy market, an increase in the supply of foreign exchange by exporters will facilitate further increase in the value of the currency. Crude oil prices were little changed today as the global recession worries and concerns about China's rising COVID-19 case numbers denting demand from the world's top crude oil importer were offset by positive impact of a retreat in the U.S. dollar. The U.S. West Texas Intermediate crude experiences a upward review of 0.76% to sell at $80.65 per barrel. Brent experienced an uptick of 0.96%, selling at $88.29. BONNY LIGHT sells at $82.53 with a price decline of 5.21%. For the OPEC basket, crude oil dealers offer $91.72 with an upward review of 0.61%.